is Chip the number one kind of all-round bank account in the UK? So I would say, if you want kind of convenience and a fairly easy to use app, I suppose it's heating up the competition between Trading 212 and Chip. So I think maybe in recent months, Chip has possibly looked at trade online traders like Trading 212 and that the apps that they have and all the services that they offer all in one place. So they do investments. You can earn cash on your normal standing balance, which is taxable, but then you can also get interest on your ISA standing balance, which is tax free, I believe. You can get cash back, all that kind of stuff as well. So the Trading 212 one, basically, you can get at the moment anyway, which is mid-June 2024 in the UK. This is US has a slightly lower rate, and other countries all have different rates. But basically, if you just have standing cash in Trading 212, you get 5.2% in the UK. The US is 5.1%, for example, and that's the same for in the UK. The if it's in an ISA, so you have uninvested cash in an ISA, you'll get that. And if you have uninvested cash in the general investment side on Trading 212, you get the same interest, but it would then be taxable, if you went over any thresholds. So that's kind of like, I suppose, a good baseline to compare everything to, and that's paid daily as well, which is quite unusual. So you've got that with the, just standing balances. That's what you get. You can have a cash ISA on there, which I think is 5.2% interest. Cash ISA, and then you can also have stocks and shares ISA. In the both of those are in the UK. So you can invest in whoever you want there. And with that, I would say with investing, you are picking individual. You can pick individual companies and things like that, but just remember that does potentially hold a risk. Well, maybe more of a risk. But you can pick things like FTSE 100 or S&P 500. Well-established kind of index funds you can do there, and it's very low fees. To use there. So and it's most of them, I think, if they're traded in the UK and you're in the UK, it's a lot of them have zero trading fees, but you can look per transaction and so on. So that's kind of a baseline to compare everything to. So Chip used to only allow the stocks and shares ISA if you're a paying customer, but they've scrapped that now. So free customers can get it's a more limited selection to funds. But they're very, very easy to look at. So it's like low risk, medium risk, high risk, and they give you the kind of, I suppose, historic annual returns, which, remember, aren't a guarantee of anything in the future, but like an indication, yes. So again, you can get S&P 500, you can get clean energy indexes, and you can get, FTSE 100 indexes, etc. And all of those are also available on Trading 212, as they would be lots of other providers. So there's nothing unique, but it is relatively easy to use, and it would be all in one place, as it would be with Trading 212 if you go to Chip. I suppose with Chip, so they have 0.25% platform fees now, so that is lower than it used to be, because I know sometimes when you looked at the different funds will have different fees, and that's generally the same with any provider. And then the platform fees, often you get something like either very little, just over 0.1% platform fees, but certain providers are still at the 1% mark, or by the time you add in platform plus trading fees, they're kind of at the 1% fee mark, which is actually really high these days. So 0.25% plus, which is the platform one with Chip, and any ones that the indexes have as well. But that's still fairly low. It's competitive now. So they're relatively good. Trading 212 would generally still be a little bit cheaper, but then it's just got that added kind of complexity. Whereas, that's a good point actually. So with the uninvested cash element, with Trading 212, the rate is higher. It is paid daily, but it's often, but not always, held in money market funds. So they're an investment, so they would not have the same kind of protection that you'd have FSCS protection in the UK as you'd have it if it was actually held in a bank. And obviously, sometimes the money with Trading 212 is held in a bank, but you have no control over that. Whereas with CHIP, it is always held in a bank. So you have that kind of, with one provider, £85,000 guarantee, but that's only, imagine that's only with the cash ISA, or if you have a, general savings account with CHIP, it is protected, whereas that is not the case with Trading 212. You would be for the element that is held in a bank, but not all of it, and you would have no control over that. The investments, I think, are different to that, but that's something to keep in mind. When you are comparing the two, so lower rate, but it is in theory safer. Or you can get a higher rate, but it is, it is riskier. Just have that in mind. And one of the main advantages I would say with CHIP is this would be particularly important if you went over your 20,000 ISA allowance. So once you've used up in a financial year the 20,000 ISA allowance, you've got to think of, I suppose, either accepting that you'll pay tax on any income, as in you won't be able to put any more into ISAs which are tax free. So you're either just accepting potentially tax on any interest if it goes over a certain level. You'd have to have quite a lot in there for a fair amount of time, but still, £20,000 out of an ISA, you'll probably breach the limits for tax in the UK. As a lower rate taxpayer, so if you're a higher rate taxpayer, that'd be half, and if you're the highest rate taxpayer, that'd be slightly less than that again. But with CHIP, basically the good option that they have on the same app is that they have a prize draw. So it works quite similar to products similar to premium bonds, things like that. So if you want to put money somewhere where there's no guaranteed income, but then any income that you do get, which are prizes, are tax free. So I think that the rate works out something like 4%, but obviously that's not guaranteed. So you could, in theory, have 0% equivalent 1 month or 3 months in a row, and then you could have 80% equivalent the next 3 months in a row, or it wouldn't be guaranteed. So that's the only thing. But what you do get back, 10, 20, 30, 40, 50 pound kind of prizes are tax free. So and I suppose there's that kind of enjoyment element of seeing if you've won every month. So that's just an added bonus with CHIP. They're both pretty easy to use apps, fairly easy to kind of sync with your account and things. Whereas with what CHIP don't have that Trading 212 do have, is Trading 212, you can get a card with them now. So it is a debit card, so no credit card protection in the UK, but it's 1.5% cash back, which is very good, and that's until around October 1st. I've got another video on the Trading 212 account if you want to hear more about that, but it's kind of, if you just spend your normal amounts on that card that you don't need consumer protection for, enhanced consumer protection for, like using a credit card, or any low purchases under £100, you wouldn't have any particular protection with a credit card anyway. You could do that spending with there. So, if you get a physical card, I suppose you could buy fuel, shopping, all that kind of stuff there. But even with the virtual card, which is what I've got, there's no fee then for the card with Trading 212, but you can buy anything that requires an online payment, anything that would typically use PayPal or Enter debit card or what have you. So, delivery services or online commerce places, etc. So hopefully you found that kind of update on CHIP handy. Take a look, and as always, not financial advice, but hopefully the tips are helpful. If you could subscribe, pop any comments, anything that you want me to have a look into. Obviously in the UK would be easier, I suppose. And I'll take a look at that. And if you could also turn on notifications, that'd be great as well. And I'll see you next time.